Here is how to sell the top in 2025. It's broken down into 3 sections. We've got exchanges, wallet structure, sell targets, and then I've got a couple of extras. Now, first up, you're not going to sell the top, but this should help you get as close as possible. Now, first off, with exchanges, you're going to want multiple. These are backups, so you can off-ramp your fiat at any point in time in case one of them gets locked out. Now, I personally have 4 different exchanges which help me off-ramp when I need to at particular points in time. This then means that if I make a big win, I can split it up between the 4, or if it's a small amount, and go between each different exchange to then lower that volume and lower that risk. Now, here's the way that I like to think about it. You've got your bank, you've then got your exchange, and then you've got your crypto. What I like to do on all of the different exchanges is go from the bank to the exchange to crypto, do some trading in crypto, back to the exchange, and this could just be on the actual exchange itself, and then back to the bank. What I then do is I establish a connection back and forth between the bank and the exchange. This means that when the bank receives a deposit from the exchange, hopefully with a big sum of money because I've made a lot on crypto, the bank isn't going to flag it and thinks that it is suspicious or sus because there is an established connection. And just say for argument's sake, you make $100,000 on a trade. What you can then do is you could then send 25 to one, 25 to another, 25, 25. So if for some reason your Coinbase account wants to lock it up, you've still got 75 grand able to pull out in between your exchanges. And when things get hot and things get crazy, having multiple exchanges is good to set up, because when the normies come through, they're going to be flooding the inboxes of the exchanges, and just having multiple set up as a backup is a very good way to actually off-ramp your cash. Now, next up is wallet structure. Just like the exchanges, having multiple wallets set up is good. For example, show you that you've got 5 wallets. And for example, you might have 100 Sol in this account, you might have 1 ETH in this account, 0.1 BTC, 200 AVAX, and then let's just go 10,000 Doge. Now, having these wallets set up differently is a couple of different things. It lets you stop looking at one giant number. So you're not looking at an account with, say, $100,000 in it and trying to set sell targets and selling small amounts. You're able to, in your mind, think about a sell target for what you want to sell your Solana at, what you want to sell your AVAX at, what you want to sell your Doge at, what you want to sell your Bitcoin and ETH at. Now, it also does give you some safety because you don't have to worry about the account getting wrecked and hacked, that one particular account, but it starts to make the sell process of these different accounts a little bit easier. I essentially think about them as buckets, fill them up to a particular point, say 100 Sol, say 1 ETH, say half a Bitcoin, whatever it is. These are different accounts that set up that put you in a good spot later. Now, here is a crucial part, which is the sell targets. Now, Raoul Pal calls this taking off the lifestyle chips. Now, the idea here with these sell targets along with your wallet structure is it gives you a chance to take profit at particular points in time. So just say you've got one wallet that has 200 Sol in, I'm just using Sol because it's easy to kind of break down here. You might want to set a take profit at 400. And the idea here is this could get you the car that you've always wanted. And what you could do here is the 50 that you sell at 525, that could pay for something else. You might have some credit card debt, something like that you want to pay off. And I think you get the idea. 25 Sol you might sell at 650, 50 at 1,000, and 75 that you want to sell at 1250. And the idea here is this just might be your straight moonbag. You might not think that Solana is going to hit 1250, but you're going to be disappointed if you've sold all of your bag and there's just that little bit amount. And the idea here is you can wipe out wallet 1, wallet 2, wallet 3 at a reasonable price, and you've essentially got 2 moonbags with 2 take profits. And then you've also got some play money because you've got a Rolex fund right there. The idea here is that with these lifestyle chips, me personally, I've got these sell targets pegged against take profit prices that I think are reasonable, that could hit. Some are going to be moonbags, but the idea here is they are based off particular things that I want and need. And for me personally, these lifestyle chips are going to be ticked off against something specific. It's not emotional. I know that wallet 1 is going to cover one specific thing, and then I'm going to be good and happy. Wallet 2 is going to cover something. Wallet 3, wallet 4, wallet 5. Wallet 4 and 5, this just might run back into BTC. If we don't hit this price, the bull market's over. You just wipe that wallet out. That's fine. Same thing with here. All of these structured sell points actually do convert into something that you would like, which then means that you can run the bull market more. Because if you just want to pay off, if you just want to get a new car, pay off your credit card debt, and it'd be nice to have a Rolex and a moon bag, totally fine. After you've sold at that, say 525, you can just run. You can be free, you can be clear. This is just fun money. You have taken it off the table. You haven't gone into your big, say, I'm just using it for example, your 100K account and trying to sell sort of 10%, then trying to sell another 20% at different points in time and chewing into it, and then looking back at what you could have had. All of your wallets, you're just selling. That 200 sold, you can then send that to one of your different exchanges or all of your different exchanges to actually off-ramp it and feel safe and secure and actually get that fiat into your bank account or convert it into another hard asset like Bitcoin. Now, the next thing are my NFTs and alternative assets. I'm actually looking at a fiat price to sell it, not a crypto price. The idea here is crypto can run up and down, but if it's the fiat price, because I've got things based around what I want to sell the NFTs for and roll them into, that's what I'm actually looking for. So with particular NFTs, they hit 100K, instant sell. 50K for another, instant sell, and others just might be, you say, a 2x or a 10x from the price that I bought them. A lot of it is being sold with fiat in mind, because ultimately in the bull run, I want to sell, convert it into fiat, put it into the bank account, make sure I pay all my taxes, do all that kind of stuff, but then use that fiat to then roll either back into hard assets like BTC or put into other assets, kind of like property, things like that. Now, this is my exact portfolio breakdown. So I've got Bitcoin at 35% of the portfolio, Solana at 30% of the portfolio, ETH at 15, NFTs at 11, meme coins at 6%, and alts at 2. Now, the Solana portion of it was only sitting at 10 or 15, and that position has just grown from the meme coin trading. I'm rotating out of the memes into Solana to hold that as it runs up, and that portion of the portfolio is actually growing quite large comparatively, and ultimately a lot of this will rotate into Bitcoin as a long-term hold and a long-term play. But overall, that is how my current portfolio is stacking up at this part in the bull run. Now look, because I'm sure you want to know what do I think is going to happen with the market this time around. With Bitcoin, I do think a bull case is 250K, and a bear case, I'm going to go 150K. With ETH, I'm going to say a bull case of like sort of 10K, just because I don't see it kind of going much. I've still got it, I've still got a bag of it, but it's just not performing as well. And a bear case, I'm going sort of like 7.5K. With Solana, I do think it hits 1,000 this cycle. And a bear case, I'm saying $500. Now, the reason I think it's going to hit 250 this cycle, and this is just a gut feeling, is everyone has PTSD from the last cycle. Everyone thinks that they're going to be diminishing returns, things aren't going to sort of go up as high, but the market wants to cause max pain as much as possible. Everyone that bought Bitcoin at sort of 50 or 100K, they're going to sell at 150, and the people that buy in at 100 to 150, I think they're going to make more money than the people that were here early that sold out because they didn't think it was going to go that high. I think the market is going to cause max pain and do that, which then causes the people that sold out early to FOMO back in and push up to those crazy high heights. The reason I think Solana hits 1,000 is there's a lot of activity on the chain, a lot of action, a lot of the culture is happening on Solana. That's just what people are looking at, people are doing, people are trading every day. And I think if ETFs do come through, it might do something. I'm just bullish on Solana because I use it the most. I find it the most convenient and I find it the most fun. With ETH, I really wanted to hit 15K. I wanted to go above 10, but it's just the underperformance that it's had in the bear market just hasn't been as exciting to trade, be in. Gas fees suck. It's so slow. It's a behemoth compared to Sol. And there are some other alts that I'm looking at, but these are the big three and where I think those price predictions sit. So that is a look at how to sell the top in 2025. If you enjoyed this video, enjoyed this little breakdown, all the drawings, make sure to go down there, drop some love. I'd very much appreciate it. I had a pleasure making this video. Hopefully you enjoyed watching it, and I look forward to seeing you in the next one.